Today, the S&P 500 triggered that sell signal, and we see the S&P 500 Nasdaq retreat from records as Nvidia shares slide. Now, when we look at the indices across the board, the Dow was down 240 points. The Nasdaq was down 123, S&P 500 down 37, with the Russell 2000 being down 1.22. Now, if we look at advancing issues versus declining, we had 55.3% of issues declining on the day. Then as we come over and look at the sectors across the board, the laggard out there was communication services. The leader out there was basic materials. Now, the market's really suffering from a case of we have no major economic news. Monday, nothing. Tuesday, nothing. Wednesday, we have CPI data. And then on Thursday, we have the PPI data. But without all of that, we really have nothing to really sway the markets one way or the other. We look at the fear and greed index. We are sitting dead smack in the middle of neutral. So we're not too greedy. We're not too fearful. Is this gauge about to swing over into fear territory and maybe over into extreme fear? Let's not forget, we are only 8 days until Jay Powell is going to be taking the podium. And right now, the market's priced in at 85.8% chance the Fed is going to do nothing at the next FOMC meeting. Now, in yesterday's video, we talked about a sell signal using the footprint chart for the S&P 500, more specifically the SPY. And I said, if we get below the low on Friday, which the low on Friday came in at a price point of 607.02, that would trigger a sell signal. Now, the stop would be above the high of that candle. And today, if we look at the delta, we had a down candle, but the delta was positive 195.53. So if I was currently in this position, the way I would manage it is I would essentially have my stop loss at break even. If I get dinged out for break even, that's fine. However, if we look at how low the SPY could potentially go, one of the areas I would want to try to target would be this nice runner down here at about 598.26. That would be a nice little move off of that footprint chart. And we'll see if the market can make it down quite that low. Today, we take a look at Nvidia basically forming a doji-ish looking candle after gapping lower on the session. Tesla today gapped up higher, but gave up a lot of the gains. This morning, we saw Tesla out the gate gapping up, coming back down, and then trying to rally back up. So will stocks continue to sell, and how low will the market actually go? For this, we need to check in on the favorite fear gauge out there, and that's going to be the VIX. The volatility index today was up 11.36%. Now, the rule behind that is whenever we're up or down more than 10%, then the next 1 to 2 days, we're likely going to have an adverse reaction. So today, the market was down. Either on Tuesday or Wednesday, we're likely to get the market swinging back the other direction. Now, we look at the dollar index. Dollar index just kind of, a little consolidation with a downward sloping channel. Then we come over and look at gold. Gold is trying to make a way early on, trying to come up and attack this swing point right up in here. However, we're still in a wait and hold pattern, meaning until we break that pattern, I'm not convinced we're going to do an ABC pattern on the way up, taking us back towards all-time highs. And the same can be said to the downside. If we cannot break below this lower swing point here, I don't have a lot of confidence that we are going to be going to the downside. Now, when we come over and look at the SPY real quick, notice on the daily chart, what's the MACD indicator doing? The lines are trying to pinch together. They are trying to cross to the downside. Will they be able to go ahead and get the cross out here or not? We look on the 4-hour chart. What do we see? MACD indicator is already crossed to the downside. On the 1-hour chart, you can see we're almost down at the zero line right here, right now. And on the 30-minute chart, notice we are already well below the zero line. Now, over here on the hourly chart, I went ahead and turned on the 9-count indicator. Right now, today, we completed bar number 7. Can we get a bar 8, 9, and then potentially have the market bounce? If we look right over here to the left, notice the SPY came very, very close to fill in the gap. However, it did not quite make it. Now, as we look at today's volume profile, I would classify this as a B as in boy, and we have this huge minus development area in here. Now, this minus development area, the first time we come up into it, expect the market to either go sideways or start to pull back. And if that does occur and we come back up in it again, the second or third time, I would expect it to break and potentially come back and challenge the candle bodies up here about 605.99. When we come over and we start looking at the futures markets real quick, we look on the 4-hour chart. What do we see? Well, you see we started to have that retracement on the way down. Now, this is an area I talked about in Sunday's video. I said it's highly probable we're going to come back and visit that area. Well, you know what? This week, we've been able to come all the way back down through value area low. Now the question is, how much further are we going to go? Will we go all the way down towards the untested point of control at 6,015? Or are we going to kind of, melt down towards this minus development area, firm up, and then potentially bounce up higher? If we look at the candle counts, we got 1, 2, 3, 4, 5 consecutive down candles in a row. Now, if you want a way to support the channel and you trade with prop firms like Apex, My Funded Futures, or even Take Profit Trader, use the links in the description box down below. Then when we come over and we start looking at the daily profiles real quick, here's the Fibonacci level we had mapped out during the live stream. As we were starting to bounce, I said, watch for the 50% level to come back and get tested. That's exactly where the market came. Then it headed back lower. Now, if you want to make sure you don't miss the next time I go live, make sure you're subscribed and you have the bell notifications turned on for all. So let me go ahead and remove the drawings off this chart. When we look at this, well, we can see we do have a little bit of a minus development area right up here, but we also have a larger one up in this area. So first, we need to see, can we get above this first minus development area? That's going to come in anywhere from about 6,067 up here to about 6,071. Now, as we look at the volume profile levels, we have value area low coming in at 6,061.00, which we are currently below. The point of control is going to be up here at 6,074, with value area high being up here at 6,081.5. Now tonight, if we are below 6,061, then we start to turn and come back up. This minus development area is going to be a target location I most certainly want to focus on, then potentially even push targets all the way up here towards that untested point of control at 6,074. Now, as we come over and look at the QQQs real quick, notice today we did not make a new all-time high, but we were able to take out the low from Friday. However, we closed very, very close towards that area, and we still have not come back and filled the gap at 517.03. Also, a reminder, we have completed that ABC pattern completion at 526.09. We completed that pattern on Friday. We look at the MACD indicator, still crossed to the upside. On the 4-hour chart, you can see the rounding effect of that MACD indicator, and price is substantially higher up here at this peak. We look at MACD over here, and we can clearly see that MACD is not higher as price went higher, aka setting up divergence, aka weakness in the market. On the 1-hour chart, MACD indicator lines have a good separation to the downside, making their way towards the zero line. And on the 30-minute chart, MACD indicator is already at the zero line. Now, today I would classify this more as a B as in boys shape profile, lowercase b. And with that being said, are we going to work our way back up towards this area tomorrow or continue to melt down towards potentially filling the gap? Now, something I wouldn't mind seeing, have the market melt down, fill the gap, and then maybe on Wednesday, we get a positive reaction to the CPI data once it's released. Then we see the market go ahead and heading back higher if indeed we are going to go higher. As we come over and we look at the 4-hour chart for the Nasdaq, what is going on here? We have a minus development area above us, but we have a huge minus development area below us, along with that untested point of control at 21,221. Now, if you guys are freaking out about the pullback from today, grab your Fibonacci retracement tool. Measure from the swing low down here around November 19th, all the way up to the recent high on Friday or overnight. And notice the 38% level comes in all the way down here at 21,203. That would be considered a minor retracement and what could still be a very bullish phase in the market. That gets us below this minus development area. That gives us testing out that untested point of control as well. And then we'll see if we do make it down there, do we go a little bit further? Do we get towards this other minus development area and down towards that 50% Fibonacci retracement level? Now, when we come over and we start looking at the 30-minute volume profiles, this is the area that we mapped out this morning on the live stream. We mapped out this A to B equals C to D pattern. We overshot that. We went all the way down to the 1618. We wicked it, and then the market went ahead and trended back up, and then we came back down for the retest. So is this double bottom going to be enough for a substantial market bounce out here tonight or even into tomorrow? I'm going to go ahead and clear these drawings off the chart. We look at value area low. That comes in at 21,436.75. I have the point of control at 21,508.75 with value area high being 21,601.25. Now, when we zoom this chart out a little bit, let's not forget, we still have a critical level that has not come back and been tested. So if we are trading below value area low, we still have this untested value area high that's left behind from several days back at about 21,244. Below that price point, we do have an untested point of control at 21,216. So this is going to be critical. Do we get below value area low and start to come back up? Or do we break value area low and we stay below that price point? If we stay below it, then the runner targets will be that untested value area high, along with that untested point of control at 21,216. Now we come over and look at the Dow Jones real quick. You see the roll effect starting to take place. We see the MACD indicator is crossed to the downside. We look at the gap. We are very close towards filling that gap. We only need to go a little bit lower down here to 443.25. And if we grab our Fibonacci retracement tool, we measure from the swing low up here to the swing high. Notice the 38% retracement comes in dead smack on filling the gap. And we'll see, do we go down towards the gap fill and then potentially bounce back up, or do we continue to go lower? You guys let me know your thoughts in the comment section down below. Next, we jump over and take a look at the small caps today. Small caps early on rallying up only to get smacked back down. And we can see this more evident on the 30-minute chart. You can see the big gap up, boom, and then just rolled over and continued to go lower. Now, we did fill the gap out here last week. However, we have another gap a little bit lower at 234.39. So if we continue to see the other indices melting lower, then it's going to be highly probable the Russell is going to work its way down towards potentially filling the gap. Let's not forget today as well, we saw the yields back on the rise once again. Normally the yields rise. That is a negative out here for the stock market. Now, if you want to learn how to track your trailing drawdown within Trade of 8, make sure to watch this video right here.